Hi, I'm Pattu from FreeFinCal, and in this video, let's discuss 9 simple equity mutual fund portfolios for everyone. I'm FreeFinCal on Twitter, so if you're interested, you can follow me there. So I have said this in several of my past videos, and I've written, 10, 15, 20 articles on this. The age of index investing in India is here. Nifty Next 50, as I've shown, it has a great track record against many diversified mutual funds. More than 50% of mutual funds in a diversified fund category is not able to beat not only Nifty Next 50, it is many funds also have difficulty in beating the Nifty 100. Now the Nifty 100 means the top 100 stocks on the National Stock Exchange by its listed by its free float market capitalization. The top 50 of those 100 stocks is what we call popularly as the Nifty or the Nifty 50. The bottom 50 of the Nifty 100 is the Nifty Next 50. So you can have a look at these links for more clarity on these. So what I would like to discuss in this video is how to combine an index fund like the Nifty Next 50 with an active fund. And I'm going to give you 9 equity mutual fund portfolio ideas. These portfolio ideas are suitable for all ages, for any kind of investor, whether you are just starting or you are an experienced mutual fund investor. This will work. Of course, this is only the equity part of the portfolio. You will have to have a separate debt or a fixed income part. You don't need mutual funds for this. You can use fixed deposits, recurring deposits, or PPF or EPF, depending on the nature of your goal. I have a list of handpicked mutual funds called the Plumbline. Its next update is due in a couple of days. You can go to the freefincal.com main menu and you will see the handpicked mutual funds link there. There I would have given you plenty of options for debt mutual funds, but be careful while choosing debt mutual funds. You need to be a little careful about credit risk and interest rate risks and so on. So, portfolio idea number 1. So this is only index funds, no actively managed funds. You take 2 index funds, one index fund tracking the Nifty 50 and one index fund tracking the Nifty Next 50, and you invest equally in them, 50% of this and 50% of that. This is what I used to call the Nifty blend combination portfolio. Do not choose ETFs, choose only index funds. Do not get misled by the lower expense ratio of ETFs. In ETFs, you are the price at which you buy will be different from the NAV, and this means that you can gain or lose depending on the market fluctuations. So don't get into this trouble, and if the ETF is not trading frequently, you have difficulty pulling out money. So do not choose ETFs in India, choose only index funds. I cannot make this more clear. I have a video on how to choose the best index fund for Nifty Next 50. You can have a look at that. Also an article on that. So the rest of the 8 examples that I'm going to show will have the Nifty Next 50 index fund, direct plan growth option, all funds direct plan growth option only. One fund will be the Nifty Next 50, that's fixed. The other will be an actively managed fund, and as the number increases from 2 to 3 and 4 and so on, the risk in the actively managed fund will increase. So ICICI multi-asset mutual fund is a multi-asset fund, and it will hold at least 10% of gold, 10% of bonds, and 10% of equity at all times. The rest of the portfolio will be managed according to market conditions. This has a large enough AUM. It was previously called ICICI Dynamic Fund, and the AMC will maintain equity status as far as taxation is concerned for this fund. So this is a solid, low volatile fund. You can combine this with Nifty Next 50. Nifty Next 50 is extremely volatile, and you can balance this out very well with this fund. The third combination is ICICI Balanced Advantage Fund along with Nifty Next 50. Balanced Advantage Fund is an aggressive hybrid fund where the equity allocation will be dynamically changed according to market conditions, according to a price to book value model. The multi-asset fund will also use the price to book value model. This is slightly more volatile than the multi-asset fund, but will also give you great balance, and whenever the Nifty Next 50 is down or the market is down, this balanced advantage fund or the multi-asset fund will hold that. So most of the funds, most of my fund combinations will be volatility, actively managed fund that acts as a buffer or a balance to the Nifty Next 50 for its volatility. ICICI Equity and Debt Fund, this is or was previously called ICICI Balanced Fund. Again, all these funds I have reviewed. You can have a look at I have a playlist. I'll link the playlist here. So you can replace this fund with a HDFC Hybrid fund also. It is also fine, or any other aggressive hybrid fund which you think is fantastic. Please treat aggressive hybrid funds as pure equity fund. Even a multi-asset fund I will treat as pure equity only at all times. It's always better because volatility will be pretty high. So again, this is a good portfolio idea for a good balance. Now, if you don't want hybrid funds, you can choose Parikh long-term equity fund along with Nifty Next 50, the Parikh fund, or the PPFAS fund, as the old timers used to call it, old investors in the fund used to call it before the name was changed. This has got some equity exposure, 20-20% exposure. It takes cash calls when it's not able to find stocks to invest in the market, so it will have low volatility and it has given you decent returns. I'm an NFO investor in this Parikh long-term fund, and I'm fairly happy. Quantum long-term equity fund, this is also a fund that I'm invested in. Can also be used as a combination with Nifty Next 50. Quantum long-term equity also uses value. It's a value style fund, along with Parikh fund also is a value style fund. Again, this will also take cash calls if it's not able to find opportunities in the market. It can underperform in the short term for a long while. It can test your patience for months and months. It can test your patience, but it's a solid performer. It's a solid foundation. You can have Nifty Next 50 as your star, which will perform, but when the market is down, then it will not perform well and it will actually give you a loss. Under those circumstances, you need something to balance it out, and that is why I'm giving you these active fund combinations. ICICI Value Discovery Fund, I have reviewed this yesterday. Again, this is a value-oriented fund. It's not done well recently, but I think it's still a good fund you can hold for the long term. If you test your patience, you need to be patient and keep the faith in it, and I think it's a good combination to have along with Nifty Next 50. If you are interested in an ELSS fund, and only if you have a need as per your asset allocation. If there is no need to invest as per your asset allocation in an ELSS fund, use EPF, PPF, VPF for ATC tax saving. There is no need for an ELSS fund, but if your asset allocation says permits it, then you can use Franklin India Taxshield and combine it with Nifty Next 50. Use Franklin India Taxshield as long as you are in need of an ELSS fund. Once you're, if you're salaried and once your mandatory EPF deduction or NPS deduction exceeds the 1.5 lakh, then you don't need a ELSS, right? So until you need, you can use it. It's a low volatile fund. It's a consistent performer. It has done quite well. HDFC Midcap Opportunities and Nifty Next 50. This is my my last combination. I think I missed up the numbers somewhere. So this is my 9th combination. So this is only for those who are like I have the risk appetite to take on any kind of risk, and for the long term, I will not worry about volatility. Then choose the Midcap Opportunities fund with Nifty Next 50. I've reviewed this. Is a fantastic fund. Its performance has dipped a little bit. I don't think you should expect Midcap Opportunities to give you the returns that it gave 5 years back or 10 years back. But still, if you are extremely, if you can handle extreme risks, then this kind of portfolio will work for you. But be very cautious. Don't get into this. Unless you face a crash, you do not know what your risk appetite is, so be very, very, very careful. So what I've done in those previous combinations is nothing. It's a no-brainer. Anybody can do it. So please come up with your own combinations. You can enter them in the comments. Let me know what you think about these combinations. You can have any number of such combinations. There's no need to stick to these or worry too much if you don't have these funds and so on. Don't worry about that. So come with your own combinations and let me know, and I'll catch you again in another video.